Okay, let's unpack this. Welcome to our deep dive. We're looking at a whole stack of sources you've shared today, really digging into the current economic and political scene.
Yeah, it's quite a mix. We've got market stuff, tariffs, IPOs, then government moves on the Fed, spending cuts, plus, consumer angles and even a bit of culture.
Exactly. So the mission here is, well, to cut through all that noise, pull out the key insights, and help you see how these different things connect.
Right. To understand the forces shaping the markets and, frankly, everyday life right now, consider it your shortcut to getting up to speed.
Okay, let's dive in. One of the big stories jumping out is about the Federal Reserve. There's this fresh buzz, the sources mentioned, about President Trump possibly naming a shadow Fed chair soon.
Yeah, it's definitely an interesting, maybe unusual idea floating around. The concept isn't necessarily about firing Powell right now before his term is up in 2026.
So what's the goal then?
It seems to be more about signaling. Appointing someone in waiting, maybe to influence market expectations about interest rates and put the administration's stamp on the Fed's direction, ahead of time.
A shadow chair. Feels quite unconventional, doesn't it? But how practical is that, really? I mean, how the Fed actually works.
Well, the sources are pretty blunt, calling the practicality sketchy for actually changing policy now. You need 7 votes on the FOMC to move rates.
Ah, right. The committee.
And finding, more than 1 or 2 current members who'd back really aggressive rate cuts, which seems to be the goal, well, that looks tough right now.
Okay, so maybe it's less about direct control and more about sending a message, influencing the market's thinking.
That seems like a big part of it, yeah. Just telegraphing who he wants in charge could definitely shift expectations. And this is all happening while inflation seems to be moderating a bit. That May CPI was up just 0.1%.
And the job market showing some, maybe, signs of weakening.
Exactly. Things that might normally suggest rate cuts. But the Fed's been cautious, citing other headwinds.
And we saw reports mentioning Vice President J.D. Vance also urging rate cuts, joining President Trump. What's driving this big push for lower rates now? What do the sources point to?
It consistently comes back to the budget deficits. They're huge, heading toward maybe $2 trillion for 2025. That's over 6% of GDP.
Wow.
And the cost just to finance the debt, we're talking $36.2 trillion in national debt, is projected at $1.2 trillion this year alone.
1.2 trillion, just in interest costs.
Yeah, it's massive, more than anything else except Medicare and Social Security. So lowering interest rates gets framed as, well, the easiest way to lighten that load a bit.
It's that debt trap idea we hear about,
Yeah.
right? Makes sense why someone like Paul Tudor Jones was quoted calling a potential candidate uber dovish, specifically because of this debt pressure.
That's the connection the sources are making, and they do name potential candidates for the actual chair role down the line. Kevin Warsh, Christopher Waller.
Scott Bessent, the current Treasury Secretary, and Kevin Hassett, too, right?
Those are the names mentioned. And analysts like Krishna Guha, quoted in the material, are already weighing the pros and cons, experience versus maybe political closeness, views on rates.
So Warsh has Fed experience, but might be seen as too hawkish for some.
Potentially. Besson has market cred, called an adult in the room, but lacks direct monetary policy experience and might be seen as too aligned with the administration.
And Hassett.
Similar concerns maybe about central banking experience and independence. Waller's interesting because he's a current governor, and his recent comments suggest openness to cuts. But his past record is also getting looked at closely.
So it sounds like they're looking for this tricky combination. Someone credible, who gets the economy but also leans towards lower rates, and, importantly, can actually get confirmed by the Senate.
It's a real balancing act.
Yeah.
And you had former Boston Fed President Eric Rosengren quoted, hoping the choice prioritizes the Fed's actual job-stable prices, maximum employment over politics. We'll definitely be watching that.
Okay, shifting from the Fed to another big economic lever, trade, particularly U.S.-China tariffs.
Yeah.
What are the latest developments there?
Well, there are reports of progress on a U.S.-China trade deal. President Trump apparently said it's done, subject to final approval.
And he mentioned specific terms.
Yeah, things like China supplying magnets and rare earths up front, the U.S. allowing Chinese students, and crucially, tariff levels.
What were the numbers?
He stated the U.S. is getting a total of 55% tariffs, China is getting 10%. And Commerce Secretary Howard Lutnick seemed to confirm that 55% rate on China will stay for now. Won't change again, he said.
55%. That sounds Extremely high. How did they even get to that number?
According to a White House official cited in the reports, it's kind of a stacking of different tariffs. There's
Yeah.
20% on fentanyl, a 10% reciprocal tariff, plus an average of 25% from older tariffs. So 55% is described as the minimum U.S. shippers pay on those goods.
Okay, so what's the immediate fallout from that 55% number? For businesses, for consumers?
The sources are pretty direct here. MarketWatch noted anything over 10% is already tough for retailers to just swallow.
And small retailers.
They're quoted describing it as a vacation from hell. They just want clarity, stability. A lot are just waiting and seeing what happens.
Logistics firms and bigger retailers must be worried too.
Absolutely. They're saying 55% is just far too high. It'll cause instability, put companies and jobs at risk. And bottom line, they say the consumer ultimately pays those higher prices.
Right.
There was a quote from Bruce Kamenstein, a business owner, basically asking, why do this if we don't want things like T-shirts or spatulas made here? It just highlights the confusion.
That uncertainty really is a theme. On a slightly different trade note, Treasury Secretary Scott Bessent signaled maybe extending the current 90-day tariff pause for some other countries.
Right, if they're negotiating in good faith, suggesting maybe a different approach than with China. The pause is set to end July 9th.
And the sources mentioned recent talks in London.
Yeah, context there was the U.S. pushing China to speed up rare earth exports, while China wanted easier access to U.S. tech, like jet engines.
And the Wall Street Journal reported a specific deal point.
Seems so. China setting a 6-month limit on rare earth export licenses for U.S. firms in exchange for relaxed U.S. limits on things like those jet engines. It shows the back and forth.
And China had previously complained about U.S. actions, like AI chip controls and visa issues undermining things.
It paints a picture of, well, really complex and sometimes tense negotiations. Lots of moving parts.
And the broader economic impact. Jamie Dimon was quoted saying, this tariff uncertainty makes clients pause investments.
Exactly. And interestingly, JP Morgan apparently lowered its recession forecast after a previous tariff pause. It just shows how much weight this carries for the economic outlook.
Yeah, definitely. And building on those economic pressures, let's look at government spending and the debt situation. The deficit numbers are pretty stark, $316 billion just in May.
Right, bringing the total so far this fiscal year to $1.365 trillion. That's up 14% from the same time last year.
And as we talked about with the Fed, those debt financing costs are a huge part of it.
Massive. Over $92 billion just in May, interest payments on the $36 trillion plus debt, heading towards that $1.2 trillion annual figure we mentioned.
It's just mind-boggling. And the sources say tax revenues are actually up, so it's really spending that's driving this.
Correct. Tax receipts are higher, but expenditures are also up significantly. And while tariffs bring in some money, $23 billion in May, $86 billion year to date, which is up 59%.
It's a drop in the ocean compared to the deficit.
Pretty much, compared to the overall debt service cost, yeah.
So you've got Wall Street leaders, Damon, Fink, Dalio, sounding alarms about this onerous debt burden. Over 6% of GDP, calling it virtually unheard of in peacetime.
They are definitely highlighting the risks. And against that backdrop, the House is reportedly moving towards approving President Trump's proposed $9.4 billion spending cut package.
Based on recommendations from DOGE, the Department of Government Efficiency.
That's the one, DOGE. The specific targets mentioned are public media, the Corporation for Public Broadcasting, so NPR and PBS funding, and also USAI, the International Development Agency.
But the reports suggest even some Republicans might resist cuts to things like PBS and NPR, right?
Yeah.
They're pretty popular.
That's a key political hurdle highlighted. And it ties into the news about Elon Musk, who's linked to DOGE. His favorability among Republicans actually dropped quite a bit, according to a Quinnipiac poll.
Really? Even though they apparently liked DOGE's work.
Yeah, from 78% down to 62% since March. The sources specifically note his recent public spat with President Trump over the spending bill as likely contributing to that drop.
Huh. It just shows how everything gets tangled. Deficit reduction efforts, politics, personalities.
Interesting.
Okay, let's shift from federal finances to something hitting closer to home for many people. State and local taxes, or SALT. There's a Goldman Sachs analysis about the SALT cap and migration.
Right. This is a big deal, especially if you live in a high-tax state like New York or California. The current $10,000 cap on deducting state and local taxes from the 2017 tax law is set to expire end of 2025.
But the House passed that one big, beautiful bill act. which included a higher cap.
It did. A $40,000 cap for households earning under $500,000 AGI. But Goldman's analysis looked at whether even a higher cap would change migration patterns.
And what did they find?
Their conclusion was probably not. They think the trend of wealthier people moving from high-tax states northeast, west coast to lower-tax ones south, southwest is likely to continue, even with a higher cap. That trend really picked up after 2017.
Do they have specific numbers showing this?
Oh yeah, really striking data. Tax filings from New Yorkers earning over $1 million, up 40% since 2016. Sounds okay until you see Florida's high earners jumped 150% in the same period.
Wow, 150% in Florida.
And the national average was 90%. California and Massachusetts saw the biggest drops in high earners, while Texas and Arizona saw big gains, second only to Florida.
And when high earners move, it's not just their personal taxes leaving the state.
Exactly. They often bring businesses with them or they're key players in local economies, so it compounds the impact on the tax base of the states they leave. Goldman estimated maybe a 3% drop in tax revenue for places like New York and California, maybe 1–2% elsewhere, just from this migration.
So what are the arguments around this? The sources mention different viewpoints.
Well, one side says, look, high-tax states should just lower their own taxes if they want to keep people, not rely on the federal tax code to cushion the blow.
Makes sense.
The other side argues the SALT cap is unfair, basically taxing income that's already been paid in state taxes. They say it directly causes people to leave, which then puts more burden on those who stay, and could even affect congressional representation down the road. Representative Tom Suozzi was quoted on that.
So a really complex issue with big consequences for state budgets and politics. Let's look at the markets. We're seeing some activity in fintech IPOs again, after things cooled off.
Yeah, it seems like a bit of a thaw after rising rates and valuation resets put a chill on things. Chime is the big one mentioned in the sources, expected to start trading today, actually, June 12th.
And Chime really shows that valuation reset, right? They priced at $27 a share, which was above their initial range, raising $864 million. But the overall valuation,
Way down from the peak, around $9.1 billion at the midpoint of the initial range. Compare that to, a reported $25 billion valuation back in 2021?
that's a huge haircut.
It is. There's a quote from fintech investor David Golden basically saying equity was basically free in 2021, and now companies have to deal with a different reality where capital costs more.
Well, why go public now, even with lower valuations?
Well, they still need to raise capital, right? And having public stock gives them a currency they can use for acquisitions. Plus, for the early investors like DST Global or Crosslink Capital, it's still a big payday, even if it's not 2021 money.
And Chime isn't alone. We've seen others testing the waters.
That's right. eToro went public recently. Galaxy Digital debuted in the U.S. Circle had a really strong listing, apparently. Klarna filed, but then reportedly delayed its IPO after the tariff news shook things up a bit.
See, there's the connection again.
Exactly. And Gemini and Bullish have filed confidentially, too.
So how Chime performs is really important for those other companies thinking about it.
Definitely. Golden called Chime a canary in the coal mine. If it does well, maybe more follow. If it struggles, others might just decide to wait things out longer.
Makes sense. Looking at the broader market, futures were a bit lower today. Benchmarks closed down overnight. What's the feeling there?
Seems like a bit of a pause after the recent gains. Ed Yardeni was quoted suggesting investors maybe weren't thrilled with the China deal terms, or maybe unsettled by President Trump's comments about Iran nuclear talks adding geopolitical risk.
Right, always mix of factors. Speaking of market dynamics, there was a fascinating note about how much stocks can actually fall.
Yeah, this report said the average stock since the mid-'80s has dropped more than 80% at some point. Even huge winners like Apple, Microsoft, NVIDIA.
80%. That really puts things in perspective. It takes serious intestinal fortitude, as the source said, to hold through something like that.
Yeah.
Easy to say buy and hold looking backwards.
But tough to live through, absolutely. It just highlights the volatility. The sources also talked about following the smartest money.
And the argument was that means tracking company insiders, not hedge funds, according to Savita Subramanian at BofA.
That's the idea presented. When insiders put their own cash into their company's stock, especially folks known for good timing, particularly after sell-offs, it's seen as a strong bullish signal. Warren Buffett buying Occidental Petroleum is the classic example given.
Interesting. We also saw a note about value investing doing better overseas than in the U.S. this year.
Yeah, international value apparently outperforming U.S. growth recently. And a couple of quick company notes. GameStop planning a $1.75 billion bond deal maybe for more Bitcoin. The stock fell on that. And Tesla stock was up. despite Musk's spat with Trump last week, though Musk apparently regretted some posts, and Tesla delayed its robotaxi launch in Austin.
Always something happening there.
Yeah,
Hey,
yeah.
let's talk earnings. Oracle reported, giving us a look inside the tech sector, especially AI demand.
They did, and the stock jumped about 8% after hours. They beat estimates adjusted EPS of $1.70 versus $1.64 expected, revenue $15.9 billion versus $15.59 billion. That's up 11% year over year.
Solid numbers. But the outlook seems really strong.
Incredibly bullish, yeah. CEO Safra Catz projected 52% recently, and she expects overall revenue to beat their prior $104 billion target for fiscal 29.
Wow. What's driving that confidence?
The sources point to a few things. Partnerships like with Cleveland Clinic and G42 on healthcare AI, and with IBM, acquisitions like Ampere, new customers like Temu moving to Oracle Cloud.
The main thing seems to be just massive demand, especially for AI.
Absolutely. Larry Ellison called demand almost insatiable. He mentioned one client basically ordered all their available capacity. They're ramping up, spending massively, over $21 billion in capital expenditures this fiscal year, maybe over $25 billion next year, just to keep up.
And Oracle's name came up with OpenAI's huge Stargate AI project, too, though that's still early days.
Right, mentioned as involved, though the project is not formed yet. But this whole AI infrastructure build-out is huge for NVIDIA, too, isn't it?
Definitely seems like it.
NVIDIA is apparently going all in on these sovereign AI countries building their own AI capacity after deals in the Middle East, now new ones in Europe, like with Mistral in France, building an industrial AI cloud in Germany, all while they face uncertainty in China. So yeah, AI infrastructure demand is a dominant theme.
Got a couple of other quick business items here. Warner Bros. Discovery bonds took a hit. Junk status.
Yeah, big sell-off, ratings cut by Fitch, Moody's, S&P. Apparently confusion over how debt gets restructured after they spin off channels like CNN and TNT.
And Shaq settled that FTX lawsuit.
Reportedly paying $1.8 million, yeah.
Okay, let's pivot from corporate news to something very personal. Homeownership. There's a survey showing a lot of buyers actually have regrets.
It's pretty striking. 45% of American homeowners surveyed said they have regrets about their current home purchase.
Nearly half. What's the biggest reason? What's the number one complaint?
Maintenance costs and hidden fees, just frustration over those ongoing expenses. The sources say the typical homeowner spends over $18,000 a year outside the mortgage, property taxes, upkeep, internet, etc.
$18,000. And even higher in some places.
Well, yeah, closer to $29,000 a year in Hawaii and California. And the problem is people don't always factor that in properly, especially if they're already stretching their budget to buy the house.
So it becomes an uphill battle financially, as one expert put it.
Exactly. Mark Hamrick at Bankrate advises really building those costs into your budget before you make an offer so you don't get out over your skis.
Did the experts offer any practical tips for avoiding this regret?
Yeah, a few good ones. First, get a thorough home inspection. Understand what you're buying, what might need fixing soon. That might even help you negotiate.
Good.
Second, stay on top of maintenance. Do regular upkeep instead of waiting for big, expensive breaks, like cleaning gutters seasonally to avoid roof problems. Little things can save big money.
Makes sense. And the overall advice?
Don't rush. There's no shame in renting if buying isn't right for you financially right now. Give yourself grace and time, and maybe talk to a financial professional to really understand your budget, including all those ongoing costs.
That's very advice. Shifting gears again, geopolitics. Things seem tense in the Middle East.
That's the indication from the sources, yeah. The U.S. is apparently preparing a partial evacuation of its embassy in Iraq and letting military dependents leave some Middle East locations due to higher security risks.
They didn't specify the exact risks, but the news pushed oil prices up over 4%.
Right. Shows how sensitive markets are to stability there. This is happening amid generally heightened U.S.-Iran tensions, especially after 18 months of war in Gaza.
And President Trump is reportedly less optimistic about Iran agreeing to stop uranium enrichment.
That's what one report suggested. And Iran's defense minister responded with threats to hit U.S. bases if Iran is attacked. Their UN mission also pushed back, saying Iran doesn't seek nukes and U.S. actions fuel instability.
The U.S. does have a lot of bases in the region. Iraq, Kuwait, Qatar, Bahrain, UAE. The dependent departure mainly affects Bahrain, apparently.
And Iraq is always complicated, hosting both U.S. troops and Iran-backed groups. Plus, you have the history of Israel and Iran trading fire and Israeli strikes in Iraq and Syria.
So very volatile mix. And the next round of U.S.-Iran nuclear talks is coming up soon.
Yes, Iran is expected to give a counterproposal then. Definitely a situation to watch.
Okay, let's turn to public health news. A big shakeup at the CDC's Advisory Committee on Vaccines, ACIP.
Yeah, HHS Secretary Robert F. Kennedy Jr. named 8 new members to ACIP just days after firing the entire previous panel.
And the sources highlight that some of the new picks are known vaccine critics.
That's putting it mildly for some. Dr. Robert Malone is mentioned. He's known for suggesting measles deaths were due to medical errors without evidence and is prominent in the anti-vaccine movement.
And Dr. Paul Offit, a vaccine expert, called some of the new members anti-vaccine activists.
Yes, that quote was in the material. Another member, Pebsworth, is linked to the National Vaccine Information Center, which has been criticized for misinformation.
And one member, Levi, has a pinned post on X claiming mRNA vaccines cause serious harm and death, especially in young people, and should be stopped immediately.
That quote was pulled directly by the sources, yes. It's a very strong stance. On the other hand, another pick, Dr. Meisner, is described by some as highly qualified, an expert, a good choice, and has called measles vaccines very safe and highly effective.
And RFK Jr. himself has a history of downplaying measles and spreading unfounded vaccine claims. So this looks like a really significant shift in the perspectives advising the CDC.
It certainly seems that way based on the reporting.
Finally, we should take a moment to acknowledge a loss in the music world. Brian Wilson of the Beach Boys passed away at 82.
Yeah, a true legend, influential pop pioneer. His music really captured that early 60s California optimism, but he also created incredibly sophisticated, adventurous pop like the Pet Sounds album. Just timeless hits, Good Vibrations, Surfin' USA, I Get Around.
His life wasn't easy, though. The sources mention his struggles with mental health, substance abuse, the whole Dr. Landy situation dramatized in Love and Mercy.
He was often called a tortured genius. Despite all that, his impact on music is just immense, a huge loss.
So that brings us to the end of this deep dive. We've covered a lot: potential Fed shifts, trade tensions, market jitters and IPOs, migration trends, the real costs of homeownership, geopolitical hotspots, changes in public health advice, and remembering a music icon.
It really underscores how these different threads, politics, economics, global events, even personal finance, are all tangled together, doesn't it?
Absolutely. Decisions about interest rates or tariffs made in Washington or Beijing can ripple out and affect the cost of your mortgage, the price of goods on the shelf, business confidence.
Even where people decide to live, which then impacts state budgets. And then you have global events driving oil prices, which you feel at the pump. It's all connected.
So understanding these connections, seeing how one piece influences another, hopefully gives you a clearer picture of the forces shaping your world right now.
Definitely.
Here's something to think about as we wrap up. How often do you consciously trace that line from, say, a headline about the national debt to the interest rate you might pay on a future loan, or from a trade dispute to the price tag on something you buy? It's a complex chain, linking these big global events right down to your own wallet. Worth keeping an eye on those connections.